welcome back. It's time for another edition of Matter of Finance. We're so pleased to have our friend here, Brian Hamel, who is the managing partner of Thompson-Hamel LLC. Good morning and welcome back, Brian.
Thanks.
It's fall time, so we want to have a discussion this morning about the tax consequences of various cash flows that may exist in retirement. So what exactly what do you want to make the public aware of today?
Well, a lot of clients will come in and talk about taxation in retirement. I have a lot of clients that will say, I'm expecting a certain amount of cash flow in retirement, and then they find out, oh well, some of it's taxable, some of it's not taxable.
Right.
So it's a bit confusing to the investor and to people who retire. So I thought we'd talk about some of the different kinds of cash flows that are taxable in retirement and some of those that aren't taxable in retirement.
Very good. You've got some bullet points that you'd like to make aware of.
So those are cash flows that are taxable in retirement. If you're participating in a 401k plan at work, or you have a 403b plan, or a simple IRA plan, or a SEP IRA, or a traditional IRA plan, every time you take money out of those kinds of accounts, they'll create taxable income for you in retirement. So you need to know when you're contributing those, you're contributing them on a tax-free basis.
Right.
Up front, and then when you take the money out, everything is taxed. Now, if you take that money out before 59 and a half, the IRS will penalize you, typically 10%, plus the taxation. And if you take the money out after age 59 and a half, there'll just be the taxation piece of it. And then when you get to be 70 and a half, the IRS requires you to take these things that are called required minimum distributions. And it's based upon a mortality table. So those things are taxable. If you're participating in a company-sponsored pension plan, if you have a defined benefit pension plan, or you have a Maine State Retirement System pension plan, if you're an educator, or you have a federal pension or a military pension, those that create taxable income in retirement. Disability income, many people become disabled and get benefits from their employer who has paid those premiums on your behalf. When the employer pays the premium, that means the benefits are taxable. Social Security benefits. Many people think Social Security is not taxable.
I thought it was.
And it can be. Up to 85% of your Social Security can be taxable if your income is above a certain level, including Social Security earnings. Certain annuity payments are taxable. Certain inherited assets that you may have when a loved one passes away could create a taxable event for you. And any part-time jobs you have in retirement obviously can create some cash flow and tax consequences.
So what is non-taxable?
So there are many things that are non-taxable, and I like to have my clients have both pre-tax money that is taxable and post-tax money that is not in retirement, so they have some tax planning flexibility. So monies that you take out of your bank account, that's after-tax dollars, you've already paid taxes, though that won't create a taxable event. If you have certain annuity payments or annuity contracts, the amounts that you initially put in when you start to take those out aren't taxable. A Roth IRA is a great vehicle to save for retirement. Any amounts you take out of Roth IRAs aren't taxable in retirement. Disability income payments, when you've paid the premium on an individual policy, that doesn't create taxable income.
Let me ask you, is it very complicated to keep track of all of this? And what advice do you have for people?
Yeah, it is complicated because there are so many moving parts, and people sometimes don't know what's taxable and what isn't. So the best thing to do is to make sure you have a tax accountant and work in connection with your financial planner and start it early so that you know what the consequences are going to be in retirement so you don't get any surprises.
Lastly, does any of this change or kind of evolve?
It does evolve. I mean, tax laws change, and so it's really a moving target, and that's why it's important to meet with your tax accountant and your financial advisor every year.
Last important information you want to make people aware of?
Well, if people have questions about the taxability of retirement cash flows or want to plan for retirement, I'd encourage them to call and set up a time to meet with me, 764-3302, and we'd be happy to help them out.
Don't put off tomorrow what you should do today.
That's good.
All right. Thanks, Brian. We so appreciate it.
You're welcome.
We'll be right back.